guys, welcome to this Money Control live stream. We're watching Opening Bell with me, Nandita Khemka. We had a good session yesterday, especially after a 3 day sell-off and the fact that we saw, a near 2% cut last week. September started on a good note, although historically it's not such a great month for the market. But yes, nothing to complain. It was a good Monday. We cleared that 24,600 hurdle on the upside and we managed to shut shop near the day's high. And today, of course, it is the Nifty's first F&O weekly expiry, on a Tuesday. Expect some bit of volatility because of that, because we just had an expiry last week on Thursday, and then within 3 days we are looking at another expiry. So yes, there could be some bit of volatility, but some bit of move rally under way in the market ahead of the crucial GST meeting that kicks off tomorrow, 3rd and 4th September. That's a crucial GST Council meeting, to decide on the two-tier structure. So yes, so that's ahead of that, we could see some more upside perhaps. The gift nifty is hinting at a quiet start, but on the positive side, and in the pre-open as well, I can see some green ticks on the screen. But yes, lots to watch out for. We'll also get you a big market voice, Rahul Arora of Nirmal Bang, will be joining in later on the show. And of course, all your stock related queries will be in focus. So keep them coming in. We'll get our technical expert, Ajit Mishra of Religare Broking, to help you navigate your queries. So keep them coming in. And of course, all the stocks and news will also be in focus, including the likes of Hero MotoCorp and Hyundai Motor India. But before we move any further, quickly take a look at the top headlines at this point. Asian markets trade with gains as investors assess the SCO meeting of world leaders in Tianjin, with tariff uncertainty weighing on sentiment. Gift Nifty indicates a positive open for the Indian market. Crude oil prices rise as intensifying tensions between Russia and Ukraine spark concerns over supply disruptions. Gold hits a former high and trades just shy of record highs on increased optimism over Fed rate cut bets. PM Modi's next generation GST reforms could soon become a reality. The council is set to meet on the 3rd and 4th of September to discuss the proposal to shift to a simplified two-slab structure of 5% and 18%, with a special 40% rate for sin and demerit goods. And US President Donald Trump claims India has offered to cut tariffs on American goods to, in fact, nothing after he described the trade relation between the two countries as a one-sided disaster. Of course, one-sided disaster rather, but all eyes, of course, will be on some kind of conciliatory tone, that could come in on the trade front. But of course, we saw a bonhomie of sorts between the Russian president, Chinese president, and our Indian Prime Minister Narendra Modi. So yes, thaw in US, in fact, in India-China relations. But let's see how things really shape up on the trade front with the United States of America. All right, then just take a look at the cues for trade. As I mentioned, 24,600 was cleared on the upside. We saw a very good traction in autos yesterday, a near 3% rally on the auto index, even in IT for that matter, saw good buying interest. All the sectors ended in the green, barring the pharma pack. That saw some bit of, breather, some bit of a breather, in fact, some bit of selling pressure. But that is also down somewhere around 4 tenths of a percent or thereabouts. But deserving mention are some of the stocks like Ola Electric, Ather Energy. These are some of the stocks that were leading from the front when it comes to the broader universe, because the mid cap index was also up somewhere around 2%, and the bread was extremely strong. 5:2, that was the NSE advanced plan issue yesterday. Some stocks that also did well from the EMS basket were the likes of Dixon Tech, Keynes Technology. These stocks were also up in excess of 5% a piece. In fact, even capital market stocks that had come under some bit of pressure recently saw good buying yesterday. The stock ending with gains of somewhere around 3 to 5% or thereabouts. In terms of fund flows, foreign investors continue to hit the sell button. Yesterday, they sold shares worth 1430 crore rupees in the cash market. But DI buying support continues, 4,300 crore worth of stock bought in the cash market. Put call ratio spiked to 1.14 vis-a-vis, I think it was 1 point or zero point 0.7 in the previous session. So yes, all in all, things are looking like we could see some bit of an extension of yesterday's up move, but today being the weekly expiry, expect some volatility. But on that note, without any delay, let me bring on board our guest for today. Joining me is Ajit Mishra of Religare Broking. Ajit, always a pleasure chatting with you. We saw a good up move yesterday after days of sell-off. Would you expect the Nifty to cross the crucial level of 24,700 this morning? Or would you say that there could be some bit of volatility given the fact that Tuesday, expiry is the first?
Yeah, good morning, Nandita. So, yes, we made a firm start to the week, and especially after the disappointing week last, wherein we surrendered all the recent gains. We were very close to the recent swing lows around 24,350. The good part is that in yesterday's trade, we could manage to end around the day's high. We've tested 100 EMA around 24,620 area. Banking, which was the major culprit in the recent decline, also showed resilience, means we could manage to hold the long-term moving average around 53,600 mark. So all in all, consolidation is more likely, wherein 24,750 to 850 will continue to be the area where Nifty might continue to attract supplies. But at the same time, for the intraday, since we have the weekly expiry for the index, 24,520 will continue to provide the intermediate relief in case if there will be a dip. So it's likely to be a range bound session with a positive bias, provided that the heavyweights from the banking index continues to hold the key areas. Otherwise, the profit taking may resume.
Okay, that's the view then. 24,550, that will provide some bit of support. But what about the Nifty Bank Index? After days of underperformance, we saw some green on the screen when it comes to the Nifty Bank Index. Do you think it was a feeble move, so to say, because all the other sectors continue to do much better compared to the banking index?
That's true. In fact, if you see that the consumer-facing sectors, be it auto, FMCG, consumer durables, they all are trading in green despite the overall uncertainty that is looming around. And we feel that this kind of outperformance might continue. For banking, 54,500 to 54,800 will be the area where we have the next major hurdle. See, the challenge is the private banking majors ICICI and SDFC Bank in particular. They are gradually drifting lower or trading in a range. So until we see some stability, at least in the private heavyweights, I doubt that we can see any meaningful surge in the banking index in the near future. So banking is also likely to trade with a sideways bias. But yes, since the positions are oversold and we are trading very close to the major supports, possibility of consolidation followed by a rebound is high. So 54,500 to 800 is something that one can maintain as a target in case if we are holding long position, with 53,500 being the stop.
Got any thoughts on IndusInd Bank in particular? The stock is in news because it has got a new internal audit head, and this comes after months after that massive accounting discrepancy that came to the fore. The stock has seen selling pressure in accordance with other banking names as well. But any levels in terms of support that you would be watching out for in this stage, or do you think this bit of news has scope for some kind of green on the screen when it comes to industry?
So IndusInd means we have had attempts of recovery, but it couldn't sustain, and as of now, also it's trading gradually below its short-term moving averages, maintaining the negative tone. So in case if there be any rebound also, I doubt that we can sustain 780 area wherein we have the short-term averages placed, and next would be close to around 800 zone. So its overall tone is negative, and the texture also indicates a possibility of retesting the previous swing low close to around 725, 730 again. So as of now, one should refrain from any aggressive longs. In case if you have any existing position, you should utilize any recovery towards 780 area to reduce your positions.
Okay, that's the view on IndusInd. But any thoughts on some of these auto names, especially the two-wheeler pack that has been very buoyant, the likes of Hero MotoCorp, Bajaj Auto numbers, the monthly sales data came out yesterday. Or two-wheelers have had a better performance, and even tractor makers, so to say. Passenger vehicles, of course, remains under a lot of bother. But we saw good traction in the likes of Bajaj Auto, etc. even the electric two-wheeler makers like Ola and Ather. Any preferences there? Because Hero MotoCorp's figures came post market hours, and this particular company also saw a sales uptick of 8% on a year-on-year basis. Above expectations, so to say. So your thoughts on the two-wheeler pack, especially?
So yes, if you talk about the outperformance, then TVS is hands-on. Leading from the front, the stock is trading at the record highs, inching gradually higher. The gap that we had is still holding strong. Means we are seeing buying interest in every dip. Then comes Hero MotoCorp, wherein post the consolidation range breakout. Here also we are seeing this positive momentum continuing with volumes. Now we are seeing catch-up move in Bajaj Auto. Means it was trading closer to its moving averages ribbon, consolidate in a very tight range, and yesterday it was a fresh breakout. So from the trading point of view, Bajaj Auto is something which offers good risk-reward ratio at current levels, and 87.50 should be a stop loss in case if you're planning any fresh trade. And upside around 92.50 to 9500 is something that you can maintain as a position targets.
Okay, that's new. In fact, we had a query on TCS on our feed as well from Naveen. Hope that answers your query, Naveen. But just about 2 minutes to go for the markets to open. Would like to get in your recommendations for our viewers right before market open. What would you be recommending this morning, Ajit?
Right. So, Nanda, FMCG is a pack is where we are seeing consistency. Means not only the post earnings, we were seeing that most of these names were witnessing recovery. Then, off late with the GST proposal, we are seeing this traction continuing. So, Marico within the FMCG pack is something that we like. It's been consistently, inching higher, outperforming within the sector, and currently trading closer to its record highs. So we expect this outperformance to continue with 708 as a stop loss. 770 is what we are eyeing in Marico. Then, interestingly, from the metal space also is something we see Hindalco maintaining its outperformance. Means there was a marginal consolidation while we were seeing a bit of a profit taking in the metal space. But Hindalco continued to maintain its short-term positive bias, and it has witnessed a fresh breakout in the last trading session. So we expect this momentum to further continue. And 762 is what we are eyeing as the immediate target. So with stop at 697, one can accumulate Hindalco also at current levels.
Okay, Dalton also from the metal pack and Marico from the FMCG space. Those recommendations coming in from Ajit. But Ajit, we have the markets opening up. The green tick, in fact, the positive bias that's happening to see second straight day of gains. And it is up somewhere around 40 points or thereabouts. 24,665, that's where we are at. And the Sensex is up somewhere around 150. So 80,500 on the Sensex. Mid cap index, outperforming the benchmarks as of now by a slim margin, but had a good day yesterday, the broad end of the markets, and continuing that momentum. So almost a 0.5% uptick on the Nifty mid-cap index, and as of now, the breadth is extremely strong, but we wait for it to settle down really. 4:1, that's the NSE advanced plan ratio at the current juncture. In terms of the Nifty Bank Index, trading the positive bias, no big moves though, and just want to see what the auto index is doing after yesterday's stellar run. Auto index is trading with a positive bias as well, 0.2% kind of gain. In fact, all the sectors are trading in the green. Was taking the lead. I think it's the metal FMCG fat that's doing well. Oil and gas up half a percent or so. IT as well extending gains, but slim gains at the moment. So, we'll actually wait for the sectoral picture to really settle. As of now, everything is in the green, and even FMCG and pharma as well, has managed to bounce back, so to say. In terms of the individual movers, let's take a look at which is the top gainer. Reliance, has managed to edge back in the green. In fact, very strong moves on Reliance Industries, 1.5% up. Remember, the stock has come under pressure since Friday. It was under pressure, but good move today on Reliance and providing support to the index, so to say. Aside of that, Eternal, that stock is also up 1.5%. HDFC Life is the top Nifty gainer as we see. Bharat Electronics There's been an order win. That stock is also up 0.5% or so. Coal India production and offtake data came out post market hours, so that's also gaining in trade. Hero MotoCorp post August monthly sales data, that's up 6%. Bajaj Finance, this is let's say more on Bajaj Finance. Perhaps reacting to that, that stock is up 0.5%. NTPC, Tata Consumer, Geo Financial, these are some of the other numbers. What's not doing well? The stock that's taking the lead on the downside is Infosys. Some bit of profit taking kicking in some of the IT names. Infosys stock laggard 0.5% down. Dr. Reddy's from the pharma pack among laggards. Asian Paints also down 0.5%, and banking names like Axis, ICICI remain under pressure. In fact, Bajaj Auto, Tata Motors, Maruti, M&M, all these auto names are also seeing some selling pressure after the solid moves yesterday. Particularly for Infosys, Ajit, coming to you, last week as well, we started the week with a good rally on the IT pack, but post that it kind of fizzled out. What do you make of yesterday's move in some of these IT names? Because some of them are seeing some bit of pressure today. So would you say these are just sporadic moves and there's no clear trend emerging when it comes to IT now?
So yes, Nanta, in fact, if we consolidate and form a base, that would also be okay, considering that we have had noticeable underperformance from the IT pack and the IT majors like Infosys, TCS, HCL. They all are reeling under pressure. Off late, we were seeing bit of a recovery taking clues from the US data. But at the same time, sustainability is something that most of these stocks are struggling. So for Infosys in particular, we feel that 1550, 1600 will continue to be the area where the stock might continue to face resistance in case it will be further rebound, where 1400 is the intermediate support. So this 200 point is something that the stock might continue to hover in. So yes, consolidation is more likely. Avoid any aggressive longs, but if you have any existing position, for a gradual rebound towards 1550, 1600 area, you can continue to stay put with 1400 as a stop loss.
Okay, that's the view on IT. But let's get in some viewer queries. Quite a lot of them today, so I'd like to get them addressed. There's a query on Geo Finance from NP Gandhi. Today, the stock is showing good traction. In fact, both Reliance and Geo Financial are in the green. Any levels that you watch out for on both the counters, and what should really one do?
So Geofinance, after retesting its previous swing low close around 305, 306 area, yesterday we saw a rebound and we expect this rebound to further strengthen because broadly it's likely to hover in this band. So 305 to 335 is broadly the range that we are eyeing for this stock with intermediate hurdle at 320. So yes, you can continue to hold your longs with 310 as an immediate stop, with 320 as a first target area, and once we crosses this mark, then probably we can extend towards 335. Reliance, on the other hand, is currently hovering around its long-term averages. So here also we are seeing it's kind of like a base formation before setting the stage for a recovery. So 1440 to 1340 is broadly the range, 100-point range that currently we have. And with stop at 1340, yes, you can continue to hold your longs. The first hurdle could be close to around 1390. And once we surpass then 1440, the previous swing high is something that the stock might test.
Okay, that's the view. I hope that answers your query, Mr. NP Gandhi. The next one I will take up on Ixigo. Nana Prakasam has written in today the stock is down. He wants a short-term view, but last 1 month has been very good. Any advice here for the short term?
So Exigo post numbers, Nita, we are seeing this momentum continuing. Means from roughly around 190 to 300, it's almost a vertical rise. The stock has been maintaining above short-term averages, indicating the momentum is intact. After yesterday's strong surge, we are seeing a bit of a profit taking today, but I feel the trend is positive. So you continue to stay long with 270 now being the intermediate base. So with that as a stop loss, you can continue to ride this rally. Since we are at the record highs, the upside is open. So keep on trailing your stop losses and rise. So let's say once we cross 300 mark, you can trail your stop loss to 285 and maintain your long positions.
Okay, that's the view on Ixigo. Hope that answers your query. I saw a query on Jubilant Ingrevia. This one from Satvika Ranganathan. The stocks saw good traction in the last 1 month, but the momentum was lost. And in the last 1 month, it has given negative returns. Today, I think it's extremely flat. any trends that you're spotting? Do you think there's a chance of the stock regaining some momentum, some of the momentum that's lost?
So it's not a very encouraging recovery, because it's a very gradual recovery that the stock has experienced in the last 2 weeks. Volumes are almost negligible. So it's not giving us a comfort that this recovery can further strengthen. And again, we are trading closer to its immediate hurdle around 735, 740 area. So for any decisive move or recovery, we need to cross and sustain above 740 mark with volumes. Otherwise, in case if we see any dip towards 720, then probably the negative tone might continue in the stock, which could further push the stock towards 690 area. So as of now, it's an avoid. But in case if you have any existing position, 720 should be a strict stop loss.
Mm. Okay, as of now, it's an avoid. Hope that answers your query. But there is another query. I think was on HDFC Bank. Yes, from the banking lot. Coming in from Komal Makeja, wants to know if there is a case for a fresh buy for the long term. Long term, how would you look at HDFC Bank? Because of course, as we have already spoken about the banking fact, uh, you know, none of them are firing, so to say. But if you look at the longer term perspective, is it a good time to buy at these levels?
So yes, you can start accumulating, Kumal, because we have seen a marginal dip from the record highs. It's not that it's outrightly bearish. It's just that we are seeing underperformance from the banking space, and we have multiple supports around 920, 930 area, which is just 20 points away from the current levels. So you can start accumulating at current levels, add more in case if the stock witnesses further dip towards, let's say, 900 zone from the long term point of view, and continue to stay put because after a prolonged consolidation, we have seen this move unfolding in HDFC Bank. So I doubt that it's going to fizzle out just like that. So yes, you can continue to accumulate the stock on every dip till 900 and maintain your long positions.
Mm. Okay, start accumulating HDFC Bank. Hope that answers your query, Kumal. There's a query on Suzlon that's coming from Arman Ansari. Suzlon, of course, is trying to regain momentum. What do you make of the recent up move? In the last 5 days, we can see some bit of green, but the stock did come under a fair bit of pressure. And I think it's nearby, in fact, near to its 52-week lows. Yet not very far away from 52-week lows, trying to find its feet. What do you make of this up move the last few days?
So, from 74 to 56, so now we are seeing just a rebound so far because we are still trading below the major averages. 59.60 is the first hurdle, then around 60 means on every 2 points we have some resistance or the other. So, I feel that those who are stuck in Suzlon at higher levels and if the view is short term, you should utilize this recovery to reduce your position because 60 to 63 will continue to be the strong resistance area if the view is short term. So with stop at 57, you can play this rebound and book your profits around 62 levels.
Profits around 62. Call on Suzlon. Hope that answers your query. Another query on IRDA. And this stock has barely been showing any kind of clear direction. I think this query has come in from. I just lost the person. I'll take the person's name in a bit. But what are your thoughts? Ritu Sandesh. Yeah. Wants to know about IRDA. Any thoughts? Any trends? Any levels?
So IRDA, Nita, and on every rebound, we are seeing selling pressure emerging. Means of late, in the last two attempts, it tried to cross the short-term average of 20 EMA, but it couldn't sustain. And again, we are seeing that stock is gradually drifting towards its 52-week low. And a decline below 140 can further push stock the lower towards 130 levels. So it's an avoid for fresh position in case if you have any existing longs. So 140 should be a strict stop loss. And in case of recovery, 150 will be the first resistance area. And once we surpass, then probably we can see some meaningful recovery towards 160 or 170 levels. But as of now, there's no indication whatsoever for any meaningful rebound in the stocks. So maintain a strict stop at 140 and hold.
Okay, fixed stop loss at 140 and hold. That's the call. Hope that answers your query. One query on Granules India from Ratnakar Solomon. Any thoughts? Because today it's come under some bit of profit taking. The stock has been showing good traction. It's still quite some time away from 2-week high, and YTD returns are still negative. But the stock has seen good traction given double-digit returns in the last 1 month. Should dips be used to buy the counter?
So yes, it's a very strong rebound, or in fact, it's a reversal for granules. So after spending almost a year, it has finally witnessed a breakout with very strong volume. So next, once let's say we cross this 530 hurdle, then probably 580, 600 is something the stock might attempt. So you can utilize this dip, intermediate dips to accumulate the stock, and with stop at 490, you can definitely hold. First hurdle could be at 530, and then you can wait for 580 to 600 zone.
All right, that's the view on granules. There's a query from Anandru Bandhavadhyay on TVS supply chain solutions. But he wants a fundamental view, but let's talk about the technicals. This stock is has lost somewhere around 28-29% on a year-to-date basis, and attempting some kind of a rebound. Meager returns over the last month and even last 5 days have given positive but meager returns. Uh, any thoughts here at 127.5? What should one do with the counter?
See, if you see the long term also, since listing, the stock has been gradually, drifting lower from 258, the record highs level. It made a low around 107, and yes, we are seeing a recovery. But at the same time, a level close to 135, 140 is acting as a very strong resistance. So as of now, I'm not seeing any meaningful, signs of reversal yet until we cross 140 mark decisively. So it's likely to hover in this band of 120 to 140 in the near future. So with a view of long term, you can maintain your long positions, but for any meaningful recovery, we need a decisive close above 140. Then only we can see a reversal towards, let's say, 165 to 170 levels.
All right. So that's the view on TVS supply chain. That answers your question. A couple of more queries then very quickly. Vishal Dave has written in, has RVNL at the rate of 70 rupees. Wants to know whether you should hold or sell. I mean, stock is at, 316. I think he holds 70 shares. Any thoughts on how one should approach some of these railway stocks now?
So Nanta, there's no signs of reversal. Intermediate bounce is something that is normal, and in last trading session we saw the same in RVN also after retesting its previous swing lows close to around 340 area. So, sorry, it's not 340, it's 300 basically. So with that as a stop loss, yes, you can wait for a rebound to play out with 327 being the first hurdle. And then, let's say we surpass this level decisively with volume, then probably we can see a meaningful recovery towards 360. So as of now, it's a hold with 300 as a stop loss.
Okay, but this gentleman is making a huge amount of profit. I think he must have got in 2-3 years ago. So hold is the call. That's what it is, Vishal. Hope that answers your query. Any thoughts on exchange stocks and capital market stocks like depositories like CDSL? There's a query from Alex. Wants to know whether we should get into CDSL for the short term. The capital market plays have not had a very smooth run. How would you look at some of these names now?
So yes, Nita, most of these stocks are facing pressure. Or in last trading session, there was a marginal rebound in CDSL. Stock tested its resistance of long-term moving averages, placed around 1480-85 mark. So in case if we manage to surpass, then probably we can see some rebound till 1550, 1540 area. So, but it's outrightly not a very bullish structure until we cross 1600 levels decisively. So as of now, one should refrain from aggressive longs in capital market related stocks, including CDSL, and focus on more on consumer facing segments like auto, FMCG, and consumer durables.
Okay. auto FMCG consumer durables focus on these sectors now. One last query then. This one's from UK, wants to know your thoughts on Godrej Properties. This stock has also had a fairly sideways run. Looking at the 1 month chart and recently as well. How do you approach some of these real estate names, especially Godrej Properties?
Yeah, so mostly realty counters are also facing pressure, and Godrej Property has reached to its critical support zone around 1900 mark, the area from where the last time we saw a meaningful recovery toward 2600 levels. So with that as a stop loss, yes, you can wait for a rebound, but in case if it fails to hold, then definitely you should exit because that might trigger a next leg of a down move, which could push the stock towards 1700 or 1600 levels, in a weeks to come. So with 1900 as a stop loss, you can continue to hold your longs with the 2160 to 2170 being the first hurdle, and then around 2280 area.
All right, that's been Godrej Properties. With that, we've come to the end of the query segment. Ajit, lovely chatting with you. And of course, it's turning out to be a positive day as of now, although the mid-cap index has slipped into the red. But yes, Ajit, would like to thank you for taking our time, joining in and sharing your thoughts. Always a pleasure. And I look forward to interacting again. And have a good day.
Same to you, Nandita. Thanks a lot. Take care.
Thanks a lot. On that note, then, Nifty holding on to 24,677. That's where we are at. 50-point uptick on the Nifty. Remember, it's the first weekly F&O expiry for the index as well. So, expect some bit of volatility to be in data perhaps in the last hour of trade. But as of now, we are holding on to gains. And even though the mid-cap index has slipped into the red, the advanced decline ratio or the breadth of the market is firmly in favor of gainers. So take heart from that fact. Almost 5:2. That's the NSE advanced decline ratio. 1700 advancing to 750 declines. Aside of that, look at what's really lending support to the index. Reliance Industries, that stock is the top Nifty gainer, snapped out of a losing trend yesterday as well. The stock was under pressure. Remember, Friday we saw the stock losing somewhere around 3% or so, but staging a good recovery, almost 2% gains coming in on Reliance Industries. That's providing support to the index. The Nifty Bank Index just about trading in the positive zone. Yesterday it snapped out of a losing trend. Today, just about clutching on to those gains, slim gains as of now. Journal, NTPC, Nestle India, Tata Consumer, of course, all these consumer names under, in fact, seeing good buying interest ahead of the GST Council meeting that kicks off tomorrow. So you have the likes of Nestle, Tata Consumer, HUL, all of them. The green BEL on the back of an order win, 640 crore rupee order win. That stock is up and about. ONGC, Bajaj Finance, the life insurers like HDFC, SBI Life are all trading the deal. The autos, in some bit of selling pressure after yesterday's stellar run. M&M top Nifty laggard. That stock is down 1%. Dr. Reddy's, Asian Paints, some IT names like Infosys also on the selling pressure after yesterday's move. And of course, Tata Motors as well, and Maruti as well. So all these auto names that saw a stellar run yesterday coming under some bit of selling pressure, but of course, autos, FMCG, all of these will continue to hog the limelight as we await the GST Council meeting that begins tomorrow. But on that note, as promised, the big market voice on our show, Rahul Arora, CEO of Nirmal Bang, joining in. Rahul, we're chatting after a very long time. Hope you're doing well. And markets have seen a roller coaster ride, so to say, with Trump tariffs. But recently, there's some good headlines that have been dominating. In fact, there are good news that has been dominating the headlines on the domestic front. The topmost coming to my mind, of course, GST reforms. GST Council meets starting tomorrow. That will be the crucial thing to watch out for. So, do you expect the GST reforms and the demand uptick to boost FY27 earnings in a big way going forward? And also, what are your thoughts about how big a deterrent would the tariff uncertainty play here on going forward? Because we've already seen quite a bit of correction.
Morning, Nandita. Thank you for having me on the show. So I think 2 or 3 points you've raised. Let's take them backwards, I think, because the last point concerns the market as a whole. I think what's happened at the SEO summit over the last few days will obviously have Trump take notice of the fact that 3 very prominent world leaders came together, on a global platform. And I think that may prompt him to come in for some trade negotiations before the end of this month, is my hunch. Even if that does not happen, I think obviously there is going to be some amount of an impact on our GDP. We don't know what exactly it could be. It could be 0.5%, it could be 0.75%. That we will know with time, but there will be an impact. Now that depends about, on where that final tariff number eventually settles, whether it is at 50% or whether there is a partial rollback to the original 25%. So that being said, I think the reason the market has taken it in its stride is because they have seen what's happened over the last few days, and that probably both parties will come to the table for a negotiation. That is the first aspect. The second is, Nandita, I think even if you just strip this event out, I think standalone market valuations are not cheap right now. I think if you look at most sectors, barring two or three, a lot of the move that's happened over the last couple of weeks, or rather even in the last couple of months, is not rendering too much value in the market at this point in time. So you really have to struggle for, finding value, and it'll have to be a bottom up sort of approach if you're looking at the market. Now, to your point on GST, obviously it's a much awaited event. We have to see what effectively the GST rationalizations are, and more importantly, when do they kick in from? We are sitting bang in the middle of the festive season. I think, if you go back to Raksha Bandhan, we are about 3.5 weeks into the festive, and this will probably go on for another month and a half, 2 months. My sense, though, Nandita, is while you might see some deferred purchases because of when these GST kicks come in, we have to view it in conjunction with penetration levels. And I think when you talk about penetration levels of two-wheelers, four-wheelers, air conditioners, durables, electricals, all of that comes into being. Now, if I already have 2 or 3 air conditioners in my house or a couple of fans, just because GST is cut, am I going to be prompted to go on and buy another one? So I think that's the question to ask as to, is this going to be a one-time purchase? Is it going to be more a replacement purchase? And how much of this is structural in nature? As you rightly pointed out, and I like the way you framed the question, is this going to be a one-time kicker for FY27? I think that's probably all that it's going to be. I think beyond that, it's going to be back to fundamentals. There as well, if you look at market leaders, Nandita, like Blue Star, or say a Havells, these are all stocks trading at about 45, 50 times. But there is value in some of the other names in the sort of durables and electrical space. If you look at names like Orient Electric, Crompton, V-Guard, some of these are definitely presenting value compared to where the market leaders are. And you could potentially see some buying interest, emerge into these. You do have a couple of IPOs that have come into the market, like G&G Electronics, and then a couple more like LG lined up. So they may also see some appetite. But like I said, I don't know how much of this is essentially going to be structural in nature, but we like these names with or without the GST cuts on the anvil. So I think on the tariffs, on the valuations, and on the GST cuts, these would broadly be the thoughts.
Sure, Rahul, you covered quite a few points there. I also want to talk about the electric two-wheeler segment, in particular, the likes of Ola Electric and Ather. They've had a very good run over the last month or so. Of course, the GST tailwind, if it comes in, is there, but the rare earth magnet curves have been lifted. And, that perhaps is being looked at as the trigger. But do you see more upside, the likes of Ola Electric, Ather, and would you say that they actually warrant a look right now? And the runway for growth is, quite a lot here on?
So I think a couple of this is an interesting space, and we've seen the stock price movement in this space. I mean, there are names that have gone up 20, 30% in a matter of a couple of trading sessions. But of course, there are industry leaders that are talking about, adoption of as much as about 40% through the EV route in a couple of years from now. That remains to be seen as to how much of that will actually materialize. I think it's far more doable on the two-wheelers and on the scooter side than it is for passenger vehicles and higher sort of tonnage vehicles from there. But I think I'm not sure, whether some of these entities, and some may even list as to what is the structural cash flow generation for these guys. So I think, when you looked at that period of 2020, 21, 22, when a lot of these, what you call new age companies listed, a lot of them are still not making profits. So I don't know how material it will be, say, for the incumbents like a Hero, TVS, and a Bajaj as a percentage of their overall volumes. But obviously the challenges that are coming in just from the point of view of EVs, I think it's a terribly exciting space. And I think there is certainly, a huge market that is going to be exploited in terms of the two-wheelers. I think my sense, though, Ananta, is that even if you look at it from an export potential, given that India is a low-cost manufacturing hub and what you spoke about in terms of backward integration, that provides a huge opportunity. And even if you strip out the EVs, I think if you look at the export numbers that have come in just yesterday, and even for the last few months on the two-wheeler side, they're very encouraging. And I think two-wheelers as a space in India is anyway doing well. I think Eicher is on a different planet with the kind of volume growth that it's doing. But I think even if you looked at Bajaj, TVS, and Hero, they've been managing to grow by about 8, 10, 12%. So I think even the base business is doing well. This will certainly be a cherry on the top. But like I said, I think for them to become steady compounders over a period of time, I think the entire focus will be on the cash flows. The excitement has just begun. Like I said, I'm tempted to agree with certain statements like that EV adoption could be 30, 40% in the two-wheeler space. But can they be structural investments where I buy these stocks and hold them for about 5, 10 years without thinking? I'm not sure we're there just yet.
Sure, point taken, Rahul. You spoke about looking for value, but as you mentioned, market valuations aren't really cheap. So where does one really look for value? Would IT be that one pocket? Because earnings-wise, things are still looking shaky, but valuations-wise, there is a lot of call coming in on IT saying that valuations are attractive, and one should in fact look at this space.
So I think if you're looking at it from an earnings perspective, and I think if you look at the top IT companies in India, whether you're looking at TCS, Infosys, HCL Technologies, Wipro, I think these guys are going to probably grow their earnings at best between 8, 10, 11% over the next couple of years. Now, obviously, these are very mature businesses, and the base on which we're talking is extremely high. The reason I didn't put Tech Mahindra there is because Tech Mahindra still has a lot of lever in terms of margin expansion, so their earnings growth will outperform. But you're right. I think with everything that's happened in the US economy and the talks of tariffs, etc., there has been a valuation reset in the Indian IT services market, and I think most of the large cap companies are now trading anywhere between 18 to 20 times, which was I'd say between 24 to 27 times a few months back. So from a valuation perspective, it's certainly looking very attractive. There are 2 or 3 things that they have going for themselves. I think one is a free cash flow yield, the second is a dividend yield, and the third is obviously people played as a proxy to rupee depreciation, and our currency hit an all-time low just a day or two back. So I think there is a certain case for IT to outperform in the short term if things stabilize on the global front. Some of the names I gave you on the electrical side, those look like interesting names like Orient, Crompton, V-Guard, Blue Star, Havels. Though that space overall looks fairly interesting. There are certain dark horses, Ananta. I think, movies haven't been a great space for quite a bit of time. And I think over the last 6, 8 months, content has improved. And I think PVR from the consumer discretionary space could certainly be a place where people look to park money. And even in BFSI, I think something like a State Bank of India where valuations are reasonable, CD ratios are reasonable, asset quality is under control, there's not too much concern on liquidity. I think that, something like an SBI could also be, a great pick to be holding on to. So there is enough and more value both in large caps and mid caps. But like I said, it has to be very stock specific and bottom up as opposed to taking an aggregate sector call. I think the only aggregate sector call, if globally things stabilize, could potentially be IT services.
Point taken by few pockets and stock names from Rahul Arora. Rahul, I would like to thank you for taking our time and joining in. I wish we could have a longer conversation, but we'll save it for another day. But thank you so much for taking our time and joining us.
Thank you for having me.
Thank you. Well, Rahul Arora there on where to look for value in this market. But yes, we're kind of picking up pace when it comes to the market up move as well. Almost around that 24,700 mark now, 0.3% kind of move there. The Sensex is also past that 80,500 mark. Mid-cap index is once again back in the green. 0.3% kind of gain coming in the mid-cap index and the Nifty Bank index as well, touching on those same gains. So yes, all in all, the texture of the market is on the positive side. Let's hope that the momentum continues and we only pick up pace from here. But remember, it's the first F&O weekly expiry on a Tuesday for the Nifty. So perhaps some bit of volatility we prevail in the second half of the trading session. I just saw the auto index after a stellar run yesterday. That index is under some bit of profit taking today, has slipped into the red. But with that, we're completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. We'll be back with Closing Bell at 3:30 p.m. Don't forget to tune in. See you at that time with market close and the stocks on our radar. But till then, you have a great time and stay tuned to Money Control for all your other news. Thank you for tuning in.